Ladies and gentlemen, welcome back to the High Performance Trader. And today in this video, I'm going to help you master, that's right, master your entries off the 2-minute time frame, right? Because what I've realized is most people out there aren't really clear on what it takes to actually figure and get into a trade. And I really want to talk about this because, there's a lot of information out there on YouTube. There's a lot of hoopla, right? Which is a good word for it, right? Like, oh, when you master supply and demand, you'll know exactly where to get into the market, right? And when you master understanding the market auction, you'll know exactly where to get into the market. Or when you understand chart patterns or whatever the new hot word is on social media, once you understand it, you will then be able to master the market. And this is the thing, right? Like, all that information is good, but none of that information actually helps you know exactly where to pull on the trigger, right? And that's exactly what I want to talk about today in this video. Because with all that information, all that education, nothing is really super specific on where do I pull the trigger? Where do I actually get into the market? What criteria do I actually need to see to have clarity so that I can actually get into the market when I'm supposed to? And that's what I want to talk about, right? Because I don't know about you guys, but for the longest time, I struggled because I didn't know exactly what I was looking for. And I would argue that is one of the primary issues with most traders. Okay, so that's what we're going to be talking about. I'm Joshua Salvetti. For those that don't know, I've been trading for around 6 years. I struggled for about 4 of them to become profitable. And then I realized I needed more clarity to actually know where it is I needed to pull the trigger. Okay, so the trade I want to talk about today, give me a minute here while I pull up my Discord, is this guy. All right, so this is the trade that I want to break down. And once again, it wasn't a perfect trade. Okay, we cleared 51% trading SPX put options. But take a look at my entry. Okay, this is what I want to be going over today. This is what has the most importance. Okay, this is where I decided to hop in the market short. We're going to get into, why I wanted to pull the trigger here, what led me to pull the trigger here. But once again, what exactly I was looking for to know, hey, you know what? I think sellers have the ball right now, and this is where I actually want to get into the market. Okay, so that's the trade we're going to be talking about. Today was a massive rally, and I also want to touch on how moving averages really help me, right? Because at the end of the day, I'm not sure if you guys seen any of my videos where I talk about this, but the market is an environment that is extremely unstructured. Okay, there's just endless variables. Sometimes when we look at it, we literally feel like, I don't know if this thing's going up, down, left, right, sideways. And I don't know if this guy's ever, I don't know if this has ever happened to you, but I have literally focused so hard on price action that I would get migraines out the wazoo. And this is the thing, right? Like, the reason why we are focusing that hard is because we do not know what we are looking for. I would argue if you had a system and a strategy that you can just easily repeat, the trading would be not just become easier, but would actually get a lot more enjoyable. Okay, so that's what I want to go over today. And obviously, if anybody that's watching this wants more information on the strategy that we're going to talk about, all you have to do is click that link below, and it's going to bring in my website where I dive into deep detail on the strategy that I trade each and every single day. So come over, take a look at this. It's a phenomenal resource. I'm giving it away completely for free. All you have to do is put your first, last name, and email in so I can actually email it to you. And I don't just send you the mini course. I actually send you the data backing it up, because at the end of the day, guys, that's what I needed, right? Like, I got over the whole, oh, I just want to get in the market because it feels good, right? Like, I went through everything. Which is why I'm able to teach on this, right? I studied supply and demand, okay? I studied every single chart pattern. I studied the double bottoms, the double tops. I studied the inverse head and shoulders, right? I studied supply and demand so hard because, once again, I went on YouTube and I was like, you know what? This is what people are doing, right? Supply and demand. And what happened is, when I was trading supply and demand, I was always trying to capture the reversal, okay? And what happens when you try to capture the reversal? You don't know where to stomp out, okay? today is a perfect example of that, right? If I pull up this chart over here, and let's just for a minute get rid of this level, and say you're looking over here at this SPX chart, and you're like, okay, I'm a supply and demand trader. All right. We have a very large red candle right here. So I'm going to be looking for shorts in the event we come back to this level, right? Like this is how I literally used to trade. So I'd be like, okay, let's see here what happens when price comes back up to this level, and let's look for a short play, okay? Now, as price comes back up to this zone, what are we thinking as supply and demand traders, right? Once again, let me get rid of the moving averages, right? In this video, I really want to help you guys understand why moving averages are so important, right? That is the primary goal. So we have this chart right here, and we're like, okay, you know, we got a new high, but sellers are what? They are rejecting the high, right? So it's very easy to be like, okay, we have this very large red candle up here. Hold on. I'm going crazy. I'm going crazy. Oh God. What is happening? Okay, there we go. So it's very easy, right? To go, all right, we have these sellers up here. So now I want to start looking for a short play. Okay. It's very easy to think that way, right? We've been taught, you know, hey, you know what? Trade out of supply. Sellers are probably going to respect it. And of course they're going to respect it. Look at these very large red candles, right? We got a lot of selling coming out of supply. Let's go short. Well, we enter into the market short, but you know that you can never get a perfect entry. So let's just say we got into the market short like right here. All right. And the reason we can't get a perfect entry is because we need to verify that the sellers are even going to show back up. Okay. So let's say we get in short around here at 6660, right, on SPX. And then what happens, right? We're on the 5-minute time frame. The market starts to play around. And now let's go back to the entry, right? Because this is why listen, guys, I promise you this. This is why you are struggling with consistency. You do not know where to stomp out if you're wrong. Okay. So say you get into the market right here. All right. Once again, you have no clarity. You're not quite sure. You go, all right, I'm going to get into the market right here. Right here, we're in short. Okay. Now, initially, we're going to go, all right, I'm going to put my stop loss above the high, right? Well, what happens? Price comes up and starts to play with this high. And it starts to play with it a little too much, right? And if you were like me, you were trading options. So maybe right here, your buy-in was at $100, okay? $100 contract. Now, options have something called time decay. So what happens is when price was worth $100 right here, as price comes back up to these levels, it's probably worth $80 or $88. You know, you're losing 10% of your premium just because the trade isn't going in your favor. So now what do? You bump your stop down, right? So now your stop loss was at 70. Now you got to bump it down to 60 to account for the time decay. All in all, you end up getting stopped out of the trade. Because why though? Because you were trading against the market conditions. You didn't understand the context, right? Moving averages give us context, okay? It's not just, oh, trade out of supply. Oh, and it's so hilarious because the people on YouTube make these videos, and it probably works for them, right? I'm not arguing that their strategy doesn't work. It's just it didn't work that well for me, okay? And I would argue that it's very hard to actually build your own account and take trading that next level if you're trading supply and demand or reversals, right? So I went through it. Most traders need to go through it. Josh, what do I do to start trading differently? Okay. Well, that's going to bring me to the next concept, right? Moving averages. What do they do for me? All right. Well, moving averages are the most important in my opinion. Okay. Moving averages play one of the more important roles in my trading. And it's because they help me understand what the banks are actually doing, right? See, I talked about this in one of my most recent videos. If we want to start getting different results, we have to start thinking a little bit differently, okay? Where typically to become a good trader, what's our job, right? See, a lot of people think we need to learn to predict what's going to happen, right? Oh, if I could just predict what the market's going to do in the next 10, 15 minutes, I'll be a multimillionaire, right? Yeah, though that may be true, it's very unrealistic, all right? The market has massive amounts of variables. We're not going to be able to predict anything. What we need to get good at doing is understanding what the banks are doing. Okay. There are individuals, institutions, banks, very rich individuals that actually control the market, right? They are the ones that are manipulating price and actually making a market, right? We should be thankful for them because without them, we wouldn't have a market. Now, the thing is if we can get good at understanding what they're doing, understand me when I say this, if we can get good at understanding what the banks are actually doing, we can then just capitalize on it. That's what moving averages do for me. Okay. They help me on a whole nother level better understand if the market's bullish or bearish. Okay. So every day, it's not my job to predict what's going to happen. It's my job to understand the conditions of the market. How do we do that? Moving averages. Moving averages are going to help you stay on the right side of the road. Okay. They are going to help you pull the trigger and get into positions. They're going to help you get out of bad positions. Okay. Moving averages play so many different roles in my trading, I can't even count. Right. But those are the three primary, most important roles that moving averages play for me. They help me understand who's got the ball. They help me understand how to trade with who is dominant in the market. And number three, the most important part, they tell me when I'm wrong. Okay. Josh, how? Well, let's go back to the trade that I took. All right. So over here, 1124, you'll see I took a short play here around the highs on SPX. Okay. You see here, November 24th, 51%. All right, Josh, why did you take this trade? Phenomenal question. Now, all right. So the market was right here. So there's a couple different philosophies, or what could we call them? There's a couple different aspects about our trading strategy that make us a little bit different over here at High Performance Trader. Okay. Number one, we've already discussed. Okay. We are completely aware to the fact that we can't move price. So if we need to make money and we make money by understanding which way price is headed, we're going to have to do what? Right? We're going to have to identify who's losing money. All right. This is what I call the trapped buyer and seller theory. Okay. The market's going to move based off what? Greed and fear. Okay. Those are pretty much the two emotions that create this market. Greed, people want to make money, right? You can call it greed. You can call it whatever you want. But nobody gets into the market without what? Intentionally trying to make money. All right. We can agree on that. Number two, the other factor that makes the price move is people losing money or fear of losing money. Okay. So you have people that are trying to make money. You have people that are losing money. This generates price action. All right. So if we want to identify who's in control, all right, because we understand we can't move price, right, on a base level, the foundation, me and you, I don't care how much money we think we can come up with, unless we're in the hundreds of millions of dollars, we cannot manipulate price. So we need to identify what the banks are doing, and we want to know who is dominant, buyers or sellers. Josh, how do you do it? RBIs and GBIs. Okay. This is one of the other primary factors in my day trading strategy, right? And once again, if you go to my website, this breaks this down in a lot more detail, but this is what we're looking for each and every single day. Okay. The critical level tells us what? Where the bank is. The moving average cross tells us what the bank is doing. And then the RBI, GBI tells us who is dominant. Okay. And then more recently, we've incorporated the 2-minute 20, which is what we are going to be discussing in this lesson. Okay. So these are the 3 steps. This is how we get in and out of the market, but it's not just how to get in, guys. This criteria keeps us from doing retarded things. Okay. I'm sorry if that word offends you, but it's the only word I know that helps traders understand that going full tilt, right, doesn't make you a bad person. You're just being a little retarded. Okay. Like, dude, I listen, I make mistakes. Everybody makes mistakes, right? Like when you become consistent, you don't stop making mistakes. You just better manage them, right? Like that's the truth. And then the more information we understand, the less mistakes we make, right? We try to stray away from going completely full retard, right? We never go full retard. All right. I'm making myself laugh. So anyways, the RBI GBI, that's what we're discussing now. All right. So once again, the trade I took was right here. I'm going to pull this up for my futures traders. I'm just going to pull it up on ES because I know I got a lot of futures traders that follow me. And shout out to all the futures traders on the Discord now. You guys have persuaded me to trade futures as well. So let's talk about this trade on ES. All right. So over here, I have the 5-minute time frame. All right. So let me go swing over here. Where we at? All right. Moving averages. All right. Let me get rid of this volume because it's just kind of bothering me at the moment. Get rid of the volume. Okay. No more volume. All right. And then we got ES over here. So over here, I'm going to pull up the 2-minute time frame because once again, guys, the purpose of this video is to give you guys clarity. All right. I feel, in my opinion, most traders fail because they do not have clarity. All right. Number one, look at this trade off previous day high this morning. All right. And I'm sure you guys have seen my shorts, and I'm not going to stop talking about it. The 2-minute 20. What does it actually do for me? All right. The 2-minute 20 tells me where to get in the trade. Okay. What's the most important thing for a trader to make money? To know where to get in. Like, seriously, remove all the big words and all the talk and education and mindset and philosophy and psych. Remove all that. What do you got? I need to know how to get in the market. What do you got to do it? The 2-minute 20, guys. This right here. Okay. When price comes into the 2-minute 20 and can't close outside the 20, you trade with the 20. Okay. You will notice once you start following this, your results will get, I promise you, way better. Okay. You will start making more money. You will stop taking those ridiculous reversal trades that are costing you. And on the flip side, you're going to start executing way better. And just like our strategy preaches, when this is happening at a key level, this previous day high, this now has a way higher chance of continuation. All right. So once again, this is stuff that we teach in Trader Bootcamp. This is something I cover with everybody that joins my team because it's such a game changer. All right. This is sort of stuff that is going to help you do what? Pull the trigger. Okay. Execution is key. If you got on a call with me or any of my veteran traders over here at HBT, they would tell you execution is the most important part. Why? Because we get emotional. Okay. We have other things going on. Most traders are working a full-time job and they're trying to accomplish their dream. And that's friggin' awesome. Right? But this is the thing. What happens when you're at work or your girl's trying to talk to you or your dog just threw up? You have all these other things going on in life. You need clarity. You need a clear system that makes sense to you. Otherwise, what's going to happen? You're going to go full tilt. You're going to make the wrong mistake. You're going to get into the market at the wrong time. And it's going to cost you money. And you're going to be upset with yourself like I was for many, many years. Okay. So once again, the 2-minute 20 is the most important. It's not the most important moving average, but as far as entries, getting in the market, what I'm looking for, and if you guys watch our live session when we trade futures live every Friday, every trade I get in, price is respecting the 20. Every single one. Okay. Because we're not always going to see the market clearly. Okay. We like to try to guess what's going to happen, right? We like to think, oh, it's going up, but it's going to reverse or whatever it may be. That's when you lean on your moving average. Okay. That's when you lean on your system, right? Your system's there to do what? Keep you in check. It's there to filter out the noise and focus on execution. And those are the two main variables that we need to pull the trigger. Okay. So I'm kind of going off track. Let's go back to the trade that we took. It was right here. Okay. So once again, let's go back to the trap buyers and sellers theory. Okay. So what am I looking at and what am I talking about when I say these words? Okay. So anytime I get an RBI or a GBI, okay, guys, once again, this is simple stuff. Okay. I draw a zone around it. All right. This zone right here becomes my area of value. All right. Right here. This box is my area of value. Now, I may not necessarily know what's going to happen at this box, but what I do know is whatever happens at this box is going to tell me who's got the ball. Okay. Every time I get an RBI or a GBI, this green bar ignored, what am I actually seeing? These are trapped buyers. Okay. That says trap. These are trapped buyers. All right. These buyers who are trapped, guess what? They're not happy. They're about to start losing money. Okay. We're about to take advantage of it. So now that I've identified trapped buyers, I need to go, all right, how do I take advantage? Okay. And this can work on any strategy. Once I understand where the fear is or the greed, I need to take advantage. How do I actually take advantage? I drop down to the 2-minute 20 and I identify the 20 EMA retest. As soon as price respects that 20, I pull the damn trigger. All right. I'm going to say this one more time because it's the most important part of everything. If you take anything from this session, let it be. When I'm pulling the trigger, getting in the trade, buying and selling, right? It's because price came into a moving average and couldn't close outside of it every single time. Okay. So make sure, guys, if you're pulling the trigger, if you're getting in a trade, make sure it's happening next to a moving average. What does this do for me? Tells me where to get in and tells me where to get out. Okay. Literally, I'm in right there, short. Stop loss goes where? Above, literally, about on SPX. I bought my contracts for like, I think $1,200. So my stop was literally at 1,000. I was risking less than 20% on this trade to make 51% return. Okay. So key takeaways. All right. Because we don't have all the time in the world. It's not our job to predict the market. Okay. It's our job to react to the people who are moving price, the banks. Okay. So number one, it's our job to identify who's in control. Number two, it's our job to identify who is losing money and who's making money. We do this with the RBI and the GBI. Okay. Green bar ignored. Ready? On the 5-minute time frame. Then number three, we're looking to actually get in. We want to pull the trigger. We're looking to identify who's got the ball. This is where we spot the sellers defending the 20 EMA, and we hop into the trade when it tags it? No. As soon as the candle closes, respecting, keyword, the moving average. As soon as you learn to see this, as soon as you learn to identify it, and as soon as you pull the trigger with no hesitation, with no reservation, with no emotion, you will start to get way better results. So guys, that's all I got. Hope you guys appreciated this. Take advantage of that free mini course that I'm offering. And for anybody interested, I have one more slot open. We just had somebody else join, but I have one more slot opened on the Process in Profits Academy. Okay. You are going to get 1 year on the team for one payment. Once I get one more client, I'm done. We currently have a very large amount of people in the mentorship program. I love all you guys, by the way. We're making great work, but I'm only taking one more person on the Process in Profits Academy. So come join a phenomenal team. Make sure you watch this, share it to somebody that needs it. And remember, it's not our job to be right. It is our job to execute off the moving average. Let's go.